Hi, this is Ernie. I'm that guy who had $6 in his checking account to now having millions of dollars. Today I want to talk about an ETF I mentioned some time ago. So I made a bet that regional banks are in trouble and they're going to do really, really bad. So I had a short position, but I don't remember. I actually have to go back, but a couple months ago, I think I remember having a jacket. So I think it was quite cold. Maybe February, I need to go back, maybe March time. I exited that position. And during that time, I was sitting on about $150,000 or $170,000 in profit, having a short position. And I decided that it's time to buy. So I got into this thing called DPST. DPST is Direction 3, like deposit, right? DPST. It's a Direction 3X regional bank fund that had a lot of trouble before, during COVID, also while the interest rate was going up. And now with interest rate cut and then more coming, I think there's going to be more coming, I think this particular ETF will do extremely well. But before we get there, let's talk about the dividend first. It's a bit on the expensive side. It's about $104. And the dividend that has been issued right now, I think as of today, is 49 cents. So if you go to DPST, if you go to the right, it says 49 cents. So it's giving you about 0.5% return every quarter, or close to 2% for you to not do anything. You could sell options every week. You could, like SOXL, they give you like a penny per quarter. So compared to that, this is actually giving you a very, very good amount of money. Second, they've been holding government bonds or mortgages or sometimes commercial real estate loans. And as you probably have seen, like some of the expensive hotels go like belly up, and it was auctioned off. Like somebody bought it for $800 million and it was sold for 70 something, lost incredible amount of value. And you'll see this from this particular statistics that a lot of the banks were losing so much money holding on to mortgage securities, government bonds, asset-backed securities, bunch of them, and they really couldn't do anything. They were just sitting on it and not being able to utilize the money that they lent and get a good amount of money in return. This is one of the government agencies. So unrealized gains, right? Or losses if it's below. Unrealized losses, banks, you typically have some losses that they eventually write off, negative, right? So there was nothing. But then, of course, there are some gains. And then now, starting December of 2021, this is when they were heavily increasing the interest rate. And remember, when the interest rate goes up, bond prices falls. When interest rate goes up, again, it's inversely proportionate, bond price falls. So now all of a sudden, they're holding on to $700 billion every quarter. That's the type of losses that they couldn't get out of. And also, and it's by bank type, and this is the type of holdings that they have. Like the blue one is residential mortgage. And you saw a lot of news, or maybe you've not exposed to this type of news. Multifamily mortgages defaulting left and right. The light blue here is the treasuries. They're just losing money, hundreds of millions of dollars. They were losing money, but they couldn't sell. Otherwise, they're going to have realized losses. And the financing, they do some type of accounting to hide it by shifting here and there. But anyway, so the banks were in shambles. Let's look at this chart. When it was doing relatively well, but on the decline, as you can tell. And when the Silicon Valley Bank collapsed, this regional bank just collapsed from about $240 all the way to $70 and eventually went to $30. I wish I had a little more faith and bought it at $30, and I wish I could tell you that I did. I didn't. I was a little scared. But I ended up seeing an opportunity down the road that the inflation was so high that we're not going to lower the interest rate. So I ended up selling put options. And let me show you where I did it. Sorry, I meant to say buying put options. And this is the pattern that I saw from here to here. So when it broke that trend line up here, this is the area, right? So there's a clear trend line from the top to top, and then it broke that trend line. So this is when I exited my put positions that I rarely buy, and using that profit to buy actual shares and doing cover call strategy. And this is where we are right now. And as you can tell, let me draw another line that we have not breached this line, and it's just going straight up. And given that the Fed is most likely to lower interest rate going forward, this is going to test the 140 to 160 area. And once it does, it's going to go to, let me go to the 5-year chart. And it's going to go further up to 220 or even higher than that. And that's where the bottom of these two lower bottoms were when, or before the Silicon Valley Bank collapsed. I know most of you guys are looking at individual stocks, and that's great if you have the money to do it. But I also find gems that are extremely undervalued. And remember, these books, right? These two books, this same thing, one different versions. But this book actually tells you how to find value stocks, just like Warren Buffett does, so that you're not chasing after high-flying stocks like CoreWeave or NVIDIA at the current valuation. And if the AI bubble bursts, you're screwed. But something that's diversified, like regional banks, we have the right trends in place. This could not only, and technicals actually support that it broke the downward trend and it's going up. This is the type of an investment that could potentially give you, again, 2% dividends. So if you reinvest those dividends, it will continue to grow. And it's on the growth trajectory in terms of price that can go towards 140, 150, might even go to 200s in the near future. This is a type of investment that I suggest that people look at. And this book teaches you how to do that. This is the gold standard, something that Warren Buffett highly recommends. I strongly recommend this. I read this book multiple times, and this will enable you to find undervalued ETF. Again, it's 3x, so it's a little bit risky, but you can do something with KRE. That's also, is it KRE? Yes, KRE, Regional Bank ETF. You could also invest there if you think the 3x is too risky. But studying this book, thinking like Warren Buffett, trying to look for something that's undervalued when everything is so expensive, is going to reward you extremely well. Hopefully, this will give you a good sense of how I do research and how I make some bets that could potentially give me 2x or 3x in maybe a year, maybe less than a year, and potentially help your portfolio grow. I know you'll have a lot of questions. Leave me comments and I'll respond to you within 24 hours. And please don't forget to follow, like, and repost. See you soon.